All right. Good morning, guys. I hope you guys are doing amazing, and I hope you've had an amazing week. It's been the FOMC week. As you all know, we had a new rate cut that came into place, and of course, a lot of market tension came in from that particular event. And we're now in the aftermath of it, and we're trying to see what's going on with the market. In the meantime, I would like to remind you guys that this here is not financial advice, so you're going to need to do your due diligence when you're going to take out trading opportunities as well. In the meantime, don't forget we do have the Caribou bonus. That's 100% a deposit bonus on your very first deposit, of course, on your FXPesa account. So you might want to take advantage of that while it's still running. In the meantime, I'll give about a minute or two for a few more people to join in. Then we can see what today's markets do have in store for us. So you can as well share the link to a few people who you feel should be able to join in. And as well, uh, we can look at what the market does have to offer. So all right, so as usual, we do tend to start with our calendar to try and see what is most likely going to cause some bit of volatility through the day's price action or in the different markets. So, of course, there are multiple sources you can always use when it comes to fundamentals or what we tend to call macroeconomics, right? We have a few things we tend to look at when it comes to knowing what could cause volatility. Forex factor is the most popular, and here we do see we had PMI from CNY at 4:30 a.m. We do have core CPI, but this is year over year for the euro. Then later in the day at 3:30 p.m., we just have one major and news event. That's for guys who are trading Canadian pairs. We shall have that card GDP. Sorry, card GDP that will come in at 3:30 p.m. On the other hand, we can look at what we have on our equity, on our FXPesa platform. When it comes to Friday high impact, this we have Tokyo CPI. So at 2:30 a.m. So pretty early in the morning. So let's see what other news events can have later in the day, 4:30 a.m. So most of these are already happened in the Asian session. So want to look later in the day, consumer price index here over here is for the euro. So we still have the card CPI. That will be the main event for today later on, which is this over here. Yeah, so pretty much this is what we shall be having coming on later in the day. So you can look at that, and the currency pair is going to be affected by these news events later in the day. Other than that, I don't think we have any major news events coming to the end of the week. The week has pretty much ended with a China US deal. Other than that, there's been no other major news event you can expect. But one thing I want to look at is the dollar and how the dollar has performed ever since Jerome Powell delivered the Fed rate decision. So by default, whenever they cut rates, we'd expect the dollar to tank. But remember, the Fed does something called forward guidance, which is usually what they do to boost other investors who are investing into the dollar currency as itself as an asset, who are buying bonds, US dollar bonds. He tries to talk to them and explain to them why they are making the decisions and how they benefit the dollar in the future. Through those initiatives, those guys are either buy more into the dollar bonds, or they want to take their money out of the dollar bonds. So that's what they do as forward guidance. So he's doing a pretty good job at it. And you can see he's cutting rates, but the dollar is remaining dominant and strong. So here we have a small article that says the US dollar is gathering strength, prompted by the Fed chairman Jerome Powell's hawkish remarks. Remember, he did mention that the December rate cut is most likely not going to be there because it feels like the economy is doing what? Is stabilizing. So that's what he does. That's forward guidance. People have been expecting three rate cuts. That would have been the one we had in September, the October, and the December rate cut. But unfortunately, he has been able to kill those hopes and say that he's most likely not going to have a December rate cut because it feels like the labor market is picking up. So, however, without further strong economic data, prospects for the dollar maintaining its upward trajectory seem limited. In relation to monetary policy, there is rising scrutiny on the dollar, with Japan's officials expressing concerns over recent JPY fluctuations. Meanwhile, the eurozone's outlook remains stable. There is going down into the euro. So, the JPY fluctuations, as we all know, that Takaichi, the new prime minister for Japan, is also very, very dovish. By dovish, we mean is looking forward to probably cutting interest rates. That means they are dovish. So she's very dovish, and that tends to affect the dollar, that the JPY index, or the JPY currency. That's some of the things that keep happening. So one of the things that people have been watching out for the most has always been gold as well. So the anticipation had been that in case Powell comes, cuts rates as expected, of course, 25 basis points. The anticipation was that he would announce the December cut is most likely going to happen. Then we would see investors buying more into gold. But still within that speech he makes, that forward guidance speech, and he kills the hopes of having a December rate cut. It saw gold falling or reducing a bit of its gains it has made in the past months. So gold prices fell to around 4,000 per ounce on Friday, set for a second straight weekly loss, pressured by the fading expectations. You get expectations of the Fed rate cuts and US-China trade deal. Remember, the US-China trade war is one of the things that triggered the gold aggressive bull runs. We're already in a bull run on gold, but the aggressive gold bull run, you're going to realize this bull run becomes very aggressive if I remember correctly, it was around 7th April. Around 7th April is when we started seeing that we had the reciprocal tariffs coming on 2nd, and on 7th, we had this pair. Gold start giving us those aggressive 1,000 a day moves. That's why I said from with the US China trade war. So now the fact that the trade war comes to an end, that means investors are no longer trying to protect themselves, right? That means they're going to look for more riskier assets. Now, unfortunately for the investors, the riskier assets are the currency bonds in simple terms, and maybe stocks. For them, those are the riskier assets. So they have to get their money out of gold, which is a safe haven, and put into things like the US dollar, the Chinese currency, Chinese bonds. It's where they tend to look at to put their money. So the two countries reached a trade truce with a one-year deal on rare earth and critical minerals as President Trump cut fentanyl tariffs to 10%, and Beijing agreed to curb production and resume US soybean purchases. Still, some uncertainty remains over the durability of the deal. Meanwhile, Fed Chair Powell said another rate cut in December is not assured, keeping the dollar near a 3-month high and making gold costlier for foreign buyers. Nevertheless, the metal remained on track for a monthly gain and is up about 50% this year. That's year to date, the rise we have had on gold. Supported by strong central bank demand, the World Gold Council reported that central banks bought 220,000 of gold in Q3, up 28% from the previous quarter, led by Kazakhstan, while Brazil made its first purchase in over 4 years. So it's basically what has been driving the markets through this week, and what we can expect to continue pushing some bit of market sentiment. So that aside, we can now dive down into our technicals. Someone just share my technical or my MT5 chart in a few. I'm going to just share my MT5 in a few, then we can look at the technical side of it. All right. We have our chat up. In the meantime, I would like to thank everyone that attended our webinar. We had an amazing webinar on Tuesday. And for those of you that missed it, you can always just reach out to your FXPesa account manager and ask them for that video recording. It is available. That's for the special monthly webinar. And make sure you don't miss that for November. I believe it will be very epic and to be prepping us majorly on how we are going to basically start the new year and look for the market opportunities in the new year. And also navigate the first few weeks of December. So yeah, the November webinar is something you will want to look up to a lot. If you missed the October webinar, reach out to your account manager. If you don't have an FXPesa account, that means you have no account manager. You can create one with a link in description. Then you will be assigned an account manager, and then you can go ahead and ask them for the recording of that webinar editions. All right. So now I'd love to start from the US index. As usual, the dollar is where I would like to start from while doing this analysis. So as we have said, the dollar is of course on this recovery mode, pushing to the upside, pushing to the upside. It has been on a very strong recovery ever since 17th September. You realize this is the same day that Jerome Powell did his first rate cut, and then uh, we started seeing that DXY give us this pump to the upside. Now it's a daily time frame, and you're going to notice something very peculiar on high time frames. The market is simply just creating higher highs and higher lows. It's just creating higher highs and higher lows. Like it's just that direct on higher time frames. Higher time frames, the trick with them is always just patience, and it's easier to do the total analysis on relatively high time frames. So yeah, price is just creating higher highs and higher lows. And if you go through the various editions of market snapshots we have had, this is something I have really emphasized from way before price began doing this. How easy these structures become to actually be able to map out and actually be able to capitalize on. You're able to get a bias and an entry very easily once you can get that trend on a relatively high time frame. So now looking at this, we realize that now price is on course to create a new higher high because we have seen that candlestick closure above that, right? So from the 1 hour, we can look at the 4 hour time frame and see what structures price is giving us that can actually help us continue this bull move until probably see a lower time frame give us a shift in structure to start that high time frame retracement. So here we can see a high that has been created. Then right below that we can see a demand level that was provided to us. I'll mark it from here. So we have this demand to the bottom. Then we have this area here, or this most recent high that price has formed. So this is an area where I would love to see price come and close above. Later on, give us a slight retracement into it, just like it did with this. Give us a breakout retracement pushed up to the upside. Remember, the 4 hour is relatively a high time frame. It's not that high, but it's relatively a high time frame, which means it can give us very good price action, or its structures are very dominant compared to the lower time frames. So this being the DXY, I won't want to refine or look into way lower time frames. We can just stick to the high time frames and get just a general directional bias. So we can have one of the two alternatives because we still believe that DXY is strong. We believe that DXY is or the dollar index is strong, given the fundamental aspect of it and the outlook and what is currently going on with Trump and China as well. Of course, him signing a deal is good for the dollar. We know one of the reasons was why the dollar hit a 2 month low was basically because of the US China trade was one of the reasons was why we had hit those lows as well. So now, if it's a perspective we have, either price breaks above this high, gives us a nice retracement and continues the push to the upside, or alternatively, it pushes down into this demand level and continues going to the upside. It's one of those as well. So that's the dollar index. So now we can look into some dollar related pairs as well. We can look into some dollar related pairs and see what you can come up with. So, okay. Should I have my chart at the bottom, right? So that I would like to look a bit into US odd USD. It's a pair I rarely look at as well. I rarely look at, but it's a very good pair, especially for guys who are trying to you're new to the markets, you're trading smaller accounts. This is a pair that you can always learn to capitalize on as well. You have apart from US dollar news, they don't have like a lot of news affecting it time and time again. So odd USD is one of those pairs that you can always be able to capitalize on. So one thing you notice from the daily time frame on USD and odd USD, we did have a push to the upside because we also know that the US did sign a deal with Australia recently. That gave the Australian dollar a bit of strength. But one thing you're going to notice that because the US dollar is stronger than the Australian dollar, this structure is still leaning to the downside. So, of course, for the retracement to the upside into this area of interest or this supply zone here, where price has now been, where price later rejected and now is pushing to the downside. When you look at the downside, where price possibly going to, we could pull up and look at this zone here. Remember, it's a daily time frame, so you can have a zone that you can later refine. Price is always or has a tendency of coming down usually to fill up these gaps here. We have a gap that is here, to the gap up. So the anticipation that price will come lower, especially going into next week. From then into next week, then most likely close bearish. Then going into next week, can see this gap getting filled and price would come into an area of interest where it would either give us some bullish reactions or it will just slightly retrace, then continue lower based on the strength of the dollar index or the DXY, as we can see. So, going down to a lower time frame on Euro USD, we're looking at now zones where you can be able to take trade opportunities from, right? So, we're going to look at the area of interest that's available right below our gap up and realize we have this demand level here. That's a demand level rest available right before the gap up. So it's where price is looking to go to. So you can use a lower time frame to get some kind of structure that price can most likely use to go down to that area. So in this case scenario, I'm going to have this supply level here, the supply zone. So I would expect price to come back into the supply zone and then push lower onto this demand as the target area we are having there. So this is something we would like to watch out for. Price push into this area and then push lower because it's our target area as far as our AUD USD is concerned. So of course, it being bearish aligns with our analysis on the dollar index being bullish. It perfectly aligns with that analysis and that bias. So we can look a bit into Euro USD as well. Euro USD, where is this? I think I need to see how to arrange this. What to arrange? Oh. Hmm. Look for Euro USD. Here it is. All right, so here's Euro USD. We can start all the way from the daily time frame as well. Sorry. So Euro USD, we have a much more predominant downtrend in the past few days. Of course, coming in ever since the Fed cut its interest rates. That's taking us back to 17th of September with the first rate cut since last year. So you can see this trend line has been holding up very, very well. On top of that, you can beautifully look at the break of structures that price has been offering to that downside. You notice it's to the downside because that's where that most recent price action currently is pushing us to. So looking at where price currently is, we had this demand level that tried to hold price, but you can see this just as a momentum, just a correction move, and then price starts pushing to the downside. So this is 1, 2, 3, 4, 5 days price action all cleared out in 2 days. So that means that the bears are really very, very strong. And right now they are looking probably to come and close below this. And the target area I would want to watch out for would be an area like this, right? That's an open close level that I really want to have as my target area. So right now, I'm going to look for low time frame areas that are going to push price to probably take out these lows here that I've marked and probably continue all the way into 1.14139 as my overall target area. So I would love to push Euro USD all the way down to 1.14139. So what I'm going to do is I'm going to go down to lower time frames and look for those structures that price can either form based on where it is right now or price uh, will go back to before it now starts pushing to the downside. When you look at this reaction, it comes from this demand level here on the 1 hour time frame from the far left. That's where it comes from. But sure, it comes at once and price starts a correction move. But we would love to see price go all the one close below these lows. Yeah, so let's now zoom it into where price currently is. So looking at this, we have two ways we can expect price to go lower or go below that area there. So the first area of interest you can watch out for, or that I would love to watch out for, will definitely be this area here, the area of interest. So either price pushes back into this zone, then sells down, or price can come and take out this 1 hour lows over here, take out these lows, give me a retest and then push down to take out the ultimate, take out this level here. This level we want to take out as regards as Euro USD is concerned. So the bias is still bearish on Euro USD, bearish on odd USD, and then bullish on the dollar index, as we have definitely started with the dollar index as well. So we can look at another pair here. I would love to move a bit away from the dollar rated pairs. We can now look at JPY pairs, CAD JPY. These are exotic pairs. Now, exotic pairs are really tricky that sometimes people don't really like looking at them. But one thing they do offer is they offer a very nice price action, and they require a bit of patience, but then they are the best ways to enhance your trading skill when it comes to these cross pairs. They are very, very amazing. They will teach you patience, they will teach you how to wait, they will teach you how to follow your system, and they do give amazing trade opportunities. Some are very direct, some are easy to find when you have the right number of confluences. So let's look a bit at CAD JPY. So of course, it has been very, very bullish. This was a daily breakout. Price went to the upside, gave us this retracement, trying to fill this imbalance. You're going to realize very few of the JPY related pairs actually filled up the imbalance that was formed upon Takaichi having the highest probability of winning the elections to be prime minister. A lot of the JPY pairs had that gap to the upside. So we're seeing that with CAD JPY, it attempted to actually fill in that gap, but then of course picked up enough liquidity to start pushing to the upside. Now this being a 4 hour time frame, notice that price was trying to give us a push back to this area here, but it didn't quite get there. And right now it's trying to pump to the upside. So we're going to focus more on that area where price is trying to push to the upside. Yes, the general trend is bullish, and we want the bias to as well turn bullish, generally based on market structure, not just from perception. So when you look at what price is currently doing right now, did create a higher high around here, and then price trying to retrace. So we'd love to see bulls coming. When price closes above this area here, you can anticipate a retracement and then possibly push price all the way to the upside. So it will be a candlestick closure above these highs, a retracement back into the zone, and then price can now move all the way to the upside. Alternatively, what would happen is that if price rejects this level here, or this resistance level, if price rejects it, then you're going to come lower into lower areas of interest. And the one I would love to watch the most of now would be this. Price tried to get to it, but didn't quite get to it. So it serves as an inducement, something like an inducement. They're inducing you to do something, or they're forcing you to do something. So they came here and forced sample to sell, then they went to the upside. So these sellers here had been induced to become liquidity for the market as well. So that's what inducement basically means. The market tries to lure you to take a certain decision, then it turns on you. So that's what we call an inducement, and that's where the idea of inducements comes from. So that's as far as KJPY is concerned. We would like to see that happening. We know that the Japanese yen is currently weak because, of course, the prime minister is dovish, and said whenever it comes to cutting rates, the first thing cutting low rates does is try to weaken the currency in order to boost the economy. So that's how it works. It's that's that way around, right? Boost the currency. You weaken the currency, or initiatives that weaken the currency tend to strengthen the economy. Then some initiatives that revive the economy will always weaken the currency. And interest rates is one of those two. It's one of those tools that actually has that effect on both the economy and the currency. In the meantime, I would like to spend a special shout out to Joey Tech. Wild Boss and Maureen Kakunji for being able to engage in today's session. In case you have any questions, you can go ahead and feel free to drop them in the chat. Yeah, so you can even have a conversation about the markets as you're in the chat, right? Just hey, yeah, you just anything. You can only just type it in. I hope Mombasa is treating you well, Maureen, as well, and those of you in Uganda as well, and Tanzania. Tanzania, we're praying for you guys to have the best. We're praying for you guys to have the best and stabilize. So we can dive into USD card at the meantime. We can move into USD card. Okay, so this USD card. So the dollar is, of course, strong. It has been in that good recovery there. And as you can see, it's a daily time frame on USD card, and the structure is so amazing. It's just high, low, higher, higher, low, higher. It's just that direct, right? So right now we want to see the Canadian dollar. I tried to pick up some strength against the USD in the past few days, as you can see here. But then, of course, the dollar is now strategizing to recover against the Canadian dollar as well. So when you go to the 4-hour time frame, we still want to look for the dollar to be a dominant trend. Price was trying to give us this kind of correction move, but we can see that the dollar has come up with a lot of momentum, trying to push the upside. And right now, we have a resistance level that the market is definitely trying to retest for the second time. So when you look at this zone here, why I feel like zone is very critical is because of this. You're going to notice that it's bounce, rejection, I try to bounce below, retest. See that? Break above, break below, retest, retest, all the way down, come reject, and then come the second time, right? And yet left this place aggressively. So I feel like that's a very, very strong level on USD card. And of course, when price happens to close above it, that means to have closed also above that high that you're having there. This will be the zone I'd want to look for some buying opportunities to continue the USD card, a bullish move. This is the outlook I'd want to have. But remember, one thing I've watched is how strong this level is. So this level is pretty strong, and you don't have to be messing with it. It's a very strong level. Look at how price has been reacting up when it comes to this area in the past few weeks or months or so. So this is the anticipation we want to really have when it comes to our USD card or the US dollar and the Canadian dollar. Remember, this is a 4-hour time frame, right? It's a 4-hour time frame. We coordinate this with a 30-minute time frame. So if 30 minutes is to hold the bulls, you definitely want to look at these demand levels that are available within it. We have this on the breakout area, and you have one right below it. I'll just mark out one not to have a very clustered chart, but you'll have those multiple ones. Or you can even just mark the whole area here because realize it's a consolidation, right? You realize it's a whole consolidation. So whenever you mark an area like this, you wait for price to come into this, then you can hop onto the 3 minutes or the 5 minutes to come up with some confirmation, to come up with some confirmations, right? I think it's much better that way there. We mark out this consolidation, price gets into it, then I can go to lower time frames and look for the confirmations where we can get some possible buying opportunities as far as this currency pair is concerned. And this is USD card. So we can look a bit at ZAO USD or gold. So this is gold, and this is the 4-hour time frame, right? This is our 4-hour time frame. So as you can see, it's the second straight week, as they had said, where gold is tending to close bearish as well. But right now, we are seeing today's week has a strong rejection to the upside. As of yesterday to today, our price has been on a steady recovery. Between yesterday and today, of course, price has been on recovery from the aftermath of the Fed's rate cut. and the announcement that shall possibly have no rate cut in December. So that meant that, of course, some investors will either take their money out of gold or turn back to their risk on strategies that's usually investing in bonds. So what we can see is that we have a very strong level when it comes to gold that was formed around here. You can have this resistance, but I like having now the zone and looking at the areas around there that price can possibly use. So not always a must that price will come above to this resistance and then sell, but within this zone I can look for low time frame areas where price can probably give me nice confirmations and also some nice selling opportunities. So that's what exactly I'm going to do. I'll mark this zone here and then I can swing and then I can start refining these levels here. So when it comes to the 1 hour time frame, we can look at what supply levels are here. So for now, the first thing you want to do, because these areas are up and no gold is a heavy pair, we're going to first focus on getting the areas above as draws on liquidity or areas that you can target, right? So I'm going to just have this to the maximum level here, the maximum fresh supply level I can see. Then I'm going to mark the one below. I'm going to mark it using this. So this, for now, where our price currently is, this will be my target areas, right? I see price on this a small push to the upside, give me high, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, right? So my idea is that gold should come, take out this high, take out this level, probably take out that supply level. That's how you want to be positioning yourself. Okay, the market is targeting these areas, so the must you're going to sell from them, whether even if you left when price gets there. But then the first idea is that I see price going towards these levels. What do I need to see to capitalize on this move? So when I look at this on an hour time frame, price trying to push up, and I expect it to come all the way to these areas, I can now go to my 15M, my 15 time frame, and then try to see if I can get zones that can definitely try to push me all the way to that area there. So right now, what I can see that I have no fresh demand level here. So what I'll be looking at is price breaking above this high on the 15, giving me a retracement and a push to the upside. So within this alone, there's about 30 pip range, so you can get like a 20 pip move, and nice and easy. But remember, price will give you a retracement because there is no fresh demand level within this leg here. So if there's no fresh demand level within this leg here, what other area below can price actually be able to use? So when I look critically under all these levels here, I'm going to come up with an area that is right here. So this becomes the best possible area to look for buy opportunities. But alternatively, I know that price can break above these highs, give you a retracement, and still give you some buying opportunities. So it's a game of probabilities, and you want to be thinking in those probabilities every single time. You want to be thinking around them, within them, or using them every single time. So this is what you can have out on gold. This is what gold would look like today. So of course, it's always very important to manage your risks when it comes to gold because I think in the past 3 weeks or so, we have seen gold being so volatile to an extent whereby our 1 minute candle is going to wipe out on about 12, 10, 15 pips on just a single 1 minute candle. So now, if you do not do that, then it's most likely going to um, put you in your place. That's one thing you have to watch out for when it comes to trading gold. Okay, so let's look a bit. I think it's been a while since we looked at silver. But let's look at Bitcoin. Let's look at Bitcoin, then I shall get down to your questions in a bit. All right, now coming into the 4 hour time frame. Okay, so you're having, let's look at the weekly first. So coming into the weekly, we saw this week we're taking out the previous week's high, took out this high, the previous 2 weeks highs actually, and then got some bearish momentum and it's trying to push lower. When you go down to a 4 hour time frame, when it comes down to the 4 hour time frame, price has been trying to give us this push below all the way to these levels here. And right now, what you can see is it's trying to gain in some kind of bullish momentum. So, what levels could, if price give us some bullish momentum, what levels could it possibly target? So, it will have to be the levels above that are actually fresh, which is one, and then this is the second supply level that we have above that, right? And currently, what we are seeing is that there's some bit of loss of momentum. This has been a very strong level, support level you can see there. It has been somewhat a strong level. Had a consolidation before price pumped up, and right now we are seeing price came to it, give us a break of structure to the upside, and once again it has come back and rejected that same level, meaning that it's kind of getting some bullish momentum. So if it capitalizes on the bullish momentum, we would coordinate to the 30-minute time frame. 30-minute time from what you can see, price gives us a breakout right around here, correction move into this area, and now it's trying to, but it's giving us a bullish engulfing, which means that bullish engulfing, I can anticipate the next candle, the one that has just formed, to later on give us some kind of bullish momentum shift and push that price higher from where it is. So it's the outlook I'll basically have on BTC USD. All the bias I'll be wanting to look at in regards to this particular currency pair. So this is BTC USD. It has also been a bit of up and down ever since we had the 15% crypto crash a few weeks ago. All right, so you can drop in your questions and we have a look at some of them as well. Discuss resistance. What is the bullish move? What to do with the price of gold? So let's say, for example, if let's say the sentiment in gold right now is bearish, right? If the sentiment is bearish, and let's say you have come up with a resistance level, right? Let's assume this is your resistance level. Remember, when you have a resistance on a high time frame, if this is let me see how best I can illustrate this. If if I have a resistance level like this and my bias is bearish, right? And that's the area I want to sell from. Now, if this time frame or this area here is on a high time frame, let's assume it's the 4 hour. Let's assume it's the 4 hour area. It's a 4 hour resistance level. If this is a 4H resistance, assume it's a 4 hour resistance level. So it's a 4 hour resistance level and price is somewhere down here, but you want to sell from the resistance. Sometimes price can take quite a very long time to come back to the resistance. But remember, below the 4 hour, there is a 30-minute or 15-minute somewhere, which will have more price action. So that means that this one leg of the 4 hour to push the downside is a whole low time frame trend. So that means if when this high time frame is to retrace to the 4 hour resistance, the lower time frames are most likely going to give me a trend if they're retracing. So if I know that that's the resistance on gold where I would love to sell from and it's on a high time frame, that means I can go on a low time frame, and if I have the right conditions, I can be able to buy the market to my resistance area, which is on a higher time frame, and then sell it from there. I don't know if that gets the idea out. That's why I would the bullish move would do it. That's what the bullish move would have to do with gold prices. Even if gold is going to sell, it would look for the best possible price, right? If it's going to buy, it's going to look for the lowest possible price to buy from that area, that zone, that price level to the upside. It's just the business dynamics at the end of the day. So I don't know if that answers your question, Simon. But that's basically what the resistance got to do with gold. If it's there and you want to sell gold, then you can most likely use the lower time frames to buy up to that area. JPY, Joytech. Let's look at JPY. Right, this GPJPY. So GPJPY is also bullish as well. Also bullish as well. And what we'd love to target on this is to come and take out these highs because it has a weak fill to the downside, but it has really failed to come back and fill this weak fill. Instead, it has found a very strong support level here where it has failed to go below and it's now pushing to the upside. So it's okay always for price event to leave a weak fill behind. Sometimes it does that. I always give for reference of gold. I think it was at December, November of 2023, 2024. 2020, a bit of 2023, yeah, December 2023, where gold gave us a 4 hour gap up, and until today as we speak, it's never ever gone back down there to fill that gap up. So we're seeing a bit step. We're seeing GPJPY giving us a bit of those conditions. It has formed a gap up, and a support level has formed right above the gap up. That means it's hard for price to come lower to fill up the imbalance caused by that gap to the upside. So what you can do, you can capitalize on lower time frames to see if you can get some kind of bullish moves or bullish momentum. So from the 1 hour time frame, you can see price had this bit of correction move over here, but eventually broke above. So what we'd love to see is then the price retracing somewhere into the zones formed by that slanting resistance, and then consequently see a push all the way to the upside, taking out these highs. So this is the outlook you don't have on GPJPY, very similar to CAD JPY as we had just seen a while ago. Euro USD. Okay. So Euro USD. So it's my Euro USD perspective. Let's have a look at it. So I think we already did Euro USD. We said we are targeting these lows here. One price to come all the way down, and we had gone lower to look for areas that would possibly push price to the downside. We'd come up with this area here. So first area you want to look at because price comes to a consolidation before it actually goes lower. So you'd love this area to push price lower, target this area and target the lows from the daily time frame as well. Now, worst case scenario, if price closes above these areas here or above these weeks, then you can look for buys on this all the way into this zone here, where price may definitely probably look for now proper sells later on. That will be later on within the price action. So it's your USD. We are done your USD earlier on. And could you do S&P 500? Get the shoots from here. Okay, so let's get this. Just want to get my charts. Okay, let's look at the S&P 500. Okay. S&P 500. S. Okay. So the S&P 500 has been breaking records coming into this week. From last week to this week, we just had it breaking highs on highs on highs. Of course, until the red card decision was able to come in and Paul did his thing. So you can see that S&P 500 has been very bullish. Even have a gap up here in the weekly time frame at the beginning of a new week. You can see your price came into it yesterday to try and fill up this imbalance and give us a rejection onto that. I would have loved to see that happening because the best buying area would have been this area where price broke out of. It would be the best area to look for conditions to buy. But of course, price tried to reject this area here. So going on to the lower time frames, once what kind of price action we can be offered within this. So as we speak right now, we have an area of interest. I believe we have an area of interest over here. So as you can see from here, we have a supply level that's currently being offered to us right around here. To be a nice area to look for selling opportunities when price gets into it and see if we can push price lower. In case this area fails to give us any kind of confirmations, then you can anticipate or look for that break above to continue to the upside. The best possible thing here would be to still position yourself for buys other than looking for selling opportunities yet, because the S&P has a lot of factors that are going to be pushing it. So, like some kind of earning reports come out positively when you look at the earnings calendars going into next week, as well as those that came out this week, and see how they would affect the SP 500 companies. But then this is the outlook. This is a nice selling area you can look out for. But I only want you to hold onto those sales much just because we'd like to push price all the way down here. And in case price happens to go down or to push into these zones here, these will be the best buying opportunities. But as far as today is concerned, this area is an area to watch. Either price will use it to go lower or to go above. If it doesn't give you bearish confirmations on a 30-minute or 15-minute time frame, then you'd want to see a breakout, then a retest, and then a continuous push to the upside. Probably there were some anticipations coming in or from some economists on Bloomberg and all that who are projecting the S&P 500 hitting the 7,000 price level. We're here to see if there are any macros that can push it that high, because of course, it will be macros to push it that high as well. Yes, so basically, it's the S&P 500 what can watch out for as far as this is concerned. So this basically what you can look out for. So other than that, I would like to remind you guys that going into next week, we shall resume our normal classes as well. The 11 a.m. classes, the advanced leadership classes will be going on. If you know a person or two that is in need of those classes, you can always share with them the link in bio. That's in description. If you know people are interested in learning forex trading from scratch, we have an 8 p.m. session designed for those people. So if you know a friend, a person or two, it's always very important if you can always share them so that they get a starting point. And of course, you can be with them in the industry. Peer-to-peer trading is one of the easiest ways and the most amazing ways you can be able to navigate the market, the ins and outs, and the hurdles. And don't forget to also watch the Bullish Banter podcast so that you can see how different traders have been able to navigate the markets and the hardships that come with this industry. On top of that, do not forget to capitalize on the Caribou bonus, which is a 100% deposit bonus on your first deposit onto FXPesa. And until next week, I wish you guys a blessed and lovely weekend, especially to the Arsenal fan, the Liverpool fans. I think it's Liverpool that's struggling. Even the Liverpool fans that are hitting stop loss time and time again, I wish you guys a blessed weekend.